Let's start with Capital Shopping Centres stating that they will be buying Trafford Centre in Manchester, and the stock closing at the top of the top 40. Simon, we're up almost 8% on Cap Shop. Your thoughts on this front?
Evening, Bronwyn. Yeah, yesterday when the announcement was first made, it was off about 5% on the day. So net ahead for the deal. A couple of interesting points. Firstly, they're issuing shares, 9.9% increase, and in fact they've issued those shares. It's all now a done deal. As is often with Cap Shop, they announce and they move very, very quickly. So those shares are issued. They've raised the money. Personally, I'm not a fan of issuing shares to buy assets because you pay for shares forever and a day. You're going to be paying a dividend on that for as long as they exist, as opposed to debt you pay off, then it's all gone. But an interesting point was apparently they got a letter yesterday from a group called Simon Property Group, and no connection with me, I promise, who wanted to make a cash offer for Cap Shop and said, hold back on the deal, we want to make you an offer. And they said, nope, not interested, we're not sure what the price will be or anything like that. Went ahead, deal done, and as often the case, literally within 24 hours of the announcement, it's been done. As I said, I'm not a fan of paying for shares, so certainly I wouldn't be overly chuffed if I were a shareholder.
A big surprise today, Capitec issuing a 1 billion rand rights issue. Did anybody see this one coming?
Short answer, nobody at all, and everyone I've spoken to. You know, some of the companies issuing right offers, you can see the strain on their balance sheet and the like. Capitec, certainly no strain. Yeah, bad debts were hurting, but they'd started moving in the right direction. They were coming down. Suddenly, just after 4 o'clock today, as you mentioned, Sense out, they're going to raise 1 billion rand at R1.25 a share, which is a decent discount to the current, closed at just over 150 on the market today. And what they say is they're looking to boost capital, to expand their branch network, to loan network, etc. And I suppose makes sense. They're in a fast growth stage. They're going to need cash coming through. But two things. Again, the shares, they're going to pay for them forever and a day. Why not just go and borrow money, which is relatively cheap at the moment? And I always worry about that. I think, why the share? Why the rights issue? I suppose in this sense, they're doing it to significantly grow the business. But the second point is, I would have said that their growth is starting to slow, and I would have expected them to perhaps become more self-funding at this point in the equation.
It almost sounds, Simon, as though you're reading something potentially untoward into this, as one would generally with a rights issue.
Well, absolutely. Short answer. Rights issue, I mean, let's start there. Rights issue is never good. So then as soon as you see it, you start digging, you start saying why, you start saying what's happening, what's the situation there. And Capitec's a stock I like, make no mistake of it, but it suddenly makes me think, why are they doing it? Short answer, we can't see the numbers, we've seen the results they've had, haven't given any indication. Maybe there's something we don't know. Would surprise me. At the end of the day, I suppose if you like the stock, you've got to say the management team have done brilliantly in the last 9 years since listing and launching. And maybe they really are just a case of need the money, want to grow faster.
I know you haven't had time to analyze Remgro's results. They've literally been handed to me at this moment. But headline earnings per share for the interim period up 56.3%, pretty much in the mid-range of their trading update. The stock up 1.5% today. What do you make of this one?
A quick look at the numbers as I was waiting to come on air. Broadly, it looks fairly good. As you said, pretty much in the mid-range of where they said, so what the market was expecting. The thing with companies like Remgro, what are you really buying? You're buying that deal-making ability. And what you've got at Remgro really is solid deal-making ability. They're active. You can see from just skimming through the numbers, they're out there, they're selling some of their assets, they're buying others, they're unbundling. They're not like you look at Roynet, who are sitting on a large amount of cash and not doing very much with it. So really a stock like this, because of its holding company nature, it's that deal-making ability. And if you want someone, in essence, a top CEO doing deals on your behalf, a company like Remgro is a good place to go.
We're getting very, very close to December and that potential assault on the 33,000 point level. Just taking a step back, at the beginning of this year, the JSE All Share was trading at 27,666 points. We subsequently rallied to run about that 31,500 point level. That's a 17% increase on what people thought were very high levels at the beginning of the year. We're running out of time to hit that 33,000 point level. What could be the kicker here?
I think it's, if anything, we often find during Christmas season, because of the lack of volume, markets tend to drift higher on low volumes, and I think that might just be it. And then when we get close to that level, suddenly some enthusiasm comes in. So I think, although it's going into holiday season and quiet time, I think there's every chance that we're going to make an assault on that level. And frankly, I expect to come back from Christmas holidays to see a new all-time high. We can argue the craziness of it, but that seems to be what the market is very keen to look at.
Well, put your head on a block here. What new all-time high are you expecting? Because I'm going to debate that with Paul Turan in just a moment. Do you think it's 36,000? Can we go all the way to 40,000, or is that just too rich?
Nah. I think 40 is way too rich. I frankly think 36 is too rich. I would say our all-time high is 33,233, so call it 33,250. I think we're probably going to hit 34.5, maybe 35,000, and then probably a pullback to the low 30s. Earlier in the year, we were hitting 29 and pulling back to 26. I think that range we're trading in is going to jump higher rather than 26, 29. I think we're going to probably be doing 30, 31 up to the 34 level.